All right, that is the closing bell on Wall Street, and now it is Market Domination Overtime, and we're joined by Jared Blickery and Josh Schafer to get you up to speed on the action from today's trade. Let's see where the major averages did end up. We know traders and investors had a lot to think through this week. You had the Fed meeting, the Fed telling you they're in basically no rush to cut. War in the Middle East, Israel, Iran, that conflict running red hot. Added up, the Dow is finishing today basically flat. The S&P 500, your broad gauge, is going to finish down about 0.2%. Your tech-heavy NASDAQ down about 0.5%. Now to Jared for a closer look at today's sector action. Jared.
Thank you, Josh. Yes, a photo finish for the Dow, and I'll just pull up the day's intraday price action real quickly. You can see just coming out of the red there in the final few minutes. But for the 4 days, we are looking at also a photo finish, barely in the green by about 2 basis points right there. NASDAQ over these 4 days, 0.2%, and the S&P 500 just down a little bit. So not a lot of action here, and just kind of underscoring that. I was just doing the calculations. This was the least volatile week for the Dow and also the NASDAQ. That's both the composite and the 100 and the Russell 2000 of 2025. For the S&P 500, it is the second least volatile of the year. Here is a VIX settling just above 20 for the day, and not a lot of action there. And let's just skip over to the heat maps that we're looking at and figure out the sector action. Energy, we were just talking to Ali about the oil market. Energy up the most. That was 1%, followed by consumer staples. That's XLP there, up 0.7%. Then it kind of trails off. You got financials, utilities, industrials, and discretionary rounding out the top rows. To the downside, materials took the biggest hit this week. And if we're looking at all 4 trading days, energy was the top today and also over the week. Financials and tech, communication services, and staples also making small appearances. Healthcare really took a little bit of a dive, 2.6% to the downside, and materials off by 1% as well. Let's check out the intraday on the NASDAQ. You can see a lot more red than green there. Alphabet right here, that was down about 3.85%. Apple up 2% there, finishing the day at 201 even, looks like. And some other standouts, looks like Atlassian down 3%, but not a lot of big movers to the upside or the downside for that matter. Here's the Dow. Aside from the mega caps, we got Walmart up 1%, JP Morgan very close to a record high, might have hit one on the close. That was up 1/3%. And looks like 3M in the very bottom, that was up 1%. That was one of our dark green squares. So on that note, Josh, I'm going to send it back to you.
Thank you, Jared. And now we got Josh Schafer here to break down some of the other headlines this week. So Josh, there was a lot for investors to think through this week. We had the Fed meeting where Jay Powell said, listen, I got to see how all this tariff inflation is going to play out. I got to see who's going to eat the cost of this. Is it Schafer and Lipton? Is it a seller? Is it a producer? So that was the take-away message was, well, this is a Fed that's in no rush to cut. Then we have war in the Middle East, yep. Israel, Iran, that's running red hot with still big open questions about whether the U.S. gets offensively involved. What were the big takeaways for the markets? What do you think the lessons were this week for investors?
I mean, I think the 2 key takeaways from those 2 points would be, A, we've talked a lot in the last hour about upside risk to oil or downside risk to the stock market at this point, right? I think that's how to think about that Middle East conflict. And if we do see further escalation in the Middle East, I just net think that's obviously not good for the market right now, right? From a Fed perspective, I thought Stuart Kaiser over at Citi put it pretty well. He wrote, quote, blah, FOMC, kind of just like a little bit of a shoulder shrug of a Wednesday, right? There was not a ton coming out of that. And Josh, that's really what you've seen in the major indexes at this point, right? Jared just hit on the week. You look at the major indexes over the last month, S&P 500's moved like 45 basis points to the upside. I mean, remember April when we were doing 1,000-point Dow swings every day? It's not happening right now. The market isn't moving that much. And it was interesting. I was looking at some research from the team over at Exhibit A, and Matt Ciaramino highlighted this chart. It's how the stock market does once we get back near record highs. So this is looking at after a 20% drawdown, once the S&P 500 gets within 5% of that record high, it takes an average of 3.5 months for us to squeeze out that last 5%. It has only been a month that we've been in this range. So this is pretty normal when you have a big drawdown and we snap right back up. you normally sit in a tight range for a long period of time before we can sort of break to the upside.
Very quickly, as we sit here today, what would be the next catalyst for this market? What would you be? Would it be the big splashy trade headline? Are you looking already at earnings season, which is going to be here before you know it?
Yeah, I think from a tariff perspective, I mean, you look at the Bank of America fund manager survey this week, and managers are already expecting the effective tariff rate to be in a 10 to 15% range. So I'm not sure how much a deal really helps change expectations there and gets you sort of the better than expected bump that you'd see. Kevin Gordon was talking to you yesterday from Schwab, highlighting earnings being key. Next week you have Nike, FedEx, Micron, some interesting companies that will be giving you earnings from a quarter that they actually saw tariff impacts. Remember, that Nike report will be from the end of May, so that includes April and May, and you will hear from a very large retailer that is, of course, exposed to tariffs on what those tariffs are doing to the company. So I think people are going to be watching.
Big report with line of sight right into the consumer.
Of course.
Thank you, Josh. All right, well, is China set to overtake the United States in a key sector? Well, according to a recent report from the Harvard Belfer Center for Science and International Affairs, China has the most immediate opportunity to overtake the United States in biotechnology. For more, let's welcome in Arda Ural, EY, America's industry markets leader and health sciences and wellness, as well as Yahoo Finance's very own Anjalee Khemlani. Welcome to you both. Arda, I'll start with you. Maybe just a big picture question. Does the U.S. have the investment power, in your opinion, to overtake China in biotech?
Yeah, thanks for having me. The biotech is the innovation feeder to the big pharmaceuticals, and then it only nurtures well in an ecosystem. So to answer your question, what do you need in that ecosystem for that to nurture? Investment capacity, which we have been having for the last decades, if you will, to kind of keep investing in that innovation to move on. NIH has been probably the world's largest VC, over $40 billion in a non-dilutive funding into the entrepreneurial startups. Then you have talent who has been coming in all these top universities and MDs and PhDs who are dedicated to advance it. And then you need this technology transfer system so that those intellectual property translate into a startup. And then with that investment capacity, it keeps growing and then through testing and going to the humans and then ultimately being developed for everyone's use. So yes, the US still has the capacity to invest, but it is not potentially the only game in town given the development coming from China.
I'm curious, Arda, because I know you've been tracking the deals, and we've seen the number of deals steadily increasing over the years. I saw one of the ones that you sent, which looks at the number of deals so far to date for 2025 is more than half of what we saw in 24. So we can expect that to really outpace 2024. What does that mean, though? Because I know that some of the deals that are happening are more what you would call licensing deals, right? It's not necessarily that this money is going to, from scratch investment in innovation, but it's more stuff that has already happened and is built up. Talk to me about that and why that matters.
I mean, first of all, the numbers are pretty compelling. A couple of years ago, we had pretty much like no deals, or maybe under $1 billion in 2016. And as of last year, there were $30 billion worth of licensing deals from Chinese assets into the US. And then 2025 is a very strong start. So they're definitely going to beat that number. So the reason why this is happening is in 2015, Chinese Communist Party put a priority of investing in biotech, and that was a priority sectors. And this was 10 years ago. And then that 10 years of journey started to play out for their benefit, because China historically has been known for this active product ingredients and excipients, which is like the chemicals that pharmaceuticals were using to make small molecule products. And that journey now is taking them to upstream to more advanced innovation. Probably we still have not seen a first in class, but clearly they are going for best in class. Like those are the shots on goal we are seeing more and more.
Well, that would be my question, because I know that we've seen sort of they're doing copycats or Me Too's in terms of the type of innovation coming out of China. Do we expect that they have the wherewithal to outdo the US then in that sense, in terms of coming up with the next blockbuster for the entire world?
Right. I mean, there are a couple examples, early examples, that some of the Chinese-based assets, actually head-to-head comparisons, beat or exceed, at least match the efficacy and safety profile of some of the Western developed compounds. But this is also a journey. as the earlier question, so what do they need more to get there? So they have the talent. I mean, a lot of Western educated MDs and PhDs went back to China working on that. The government itself, as a part of prioritization program, have been investing in it. So then the question is, do they have an exit strategy for those entrepreneurials? And then that, I think, is where they are lacking, because there's no like an IPO market that is comparable to the Western standards. There's no like an M&A exit until recently. I think that's where the weakness kind of maybe the opportunity for them to come up. But the deals we are talking about, they are because of the intellectual property concerns, because of the concerns of reliability and trust in the data, because there's no such institution in the world like FDA that everyone trusts and hopefully continue to trust. And for that reason, the deals seem to be more asset purchases. So I'm not taking a risk by operating in China, but I'm buying the asset in an in-licensing deal, and I'll continue to develop it, especially if you can make this cheaper and faster in China, which has been their competitive advantage over the Western companies. Then you bring that into a human fast, and then the human testing can be done, validations can be done in the more Western setting. I think that can be a winning formula for the industry.
So not necessarily that they would own it all and operate all locally. It would have to come out for us to trust it, essentially. I want to take it back a little bit to the pandemic time. I think around that time is when we first started hearing a little bit more about biotech innovation there, with the vaccines that they had coming out, and even the medical data, right? We were relying a lot on what was going on there to learn about the pandemic. And I think that's when the question started coming up. Well, what is China's power when it comes to this? And I know that looking at the clinical trials, you've seen the volume of them really boom over time. So recently we have that as well. And that tells me that they're at least looking at trying to create that space at the local level. But to your point, can we trust that data? I think that remains a question. And whether or not we would be able to replicate that. There have been some suggestions that we should be able to trust some. There are, relationships, to your point, of NIH funding that have gone there over time. So what is that level of trust looking like?
So all those deals that you just presented a couple of minutes ago have this due diligence process as part of it. So these large big pharma institutions, companies, when they are doing that deal, obviously they trust the data that they see. They try to validate it. They try to understand and put certain puts, if you will, to be able to grow them. And then obviously in the biotech, as you all know, there's this concept of bio box, meaning there is a maybe 10% down actual cash, and then the milestones make up the rest of the deal value. So for that reason, the due diligence process is active and live. And I think we should not be making a categorical statement that the data will be reliable or not reliable. It's case by case. But they're all, most of them are, Western-trained scientists. So as long as the data integrity is there, the innovation can come cheaper and faster from China. I call the situation as a co-opetition because, yes, the Western companies are competing with them, but also there's an opportunity for faster, earlier innovation to accelerate it, because these trials cost billions of dollars and years, so that when you and I are taking a vaccine or popping a pill, we know it is safe. We don't have to worry about that. The underlying data, safety, efficacy is validated.
I love that co-opetition.
Co-opetition.
I'm going to use that. And then finally, for you, looking at one of the big questions that has been out there about China is whether or not we need to worry about them as a national security threat. And so that has been a question when it comes to IP. We've seen a lot of that happen sort of in the tech space, right? The AI conversation certainly saw that Me Too copycat. So what is the maybe conversation happening now, because we see sort of the firepower there investment-wise? Is that changing the conversation at all?
I think the degree of caution is always there in terms of what you're developing. And then maybe it's not a concern today given the types of molecules coming up. They're still not first in class, but over time, this, while maybe the case, it's going to come down to, this is science in the end of the day. In the prior couple of years, people didn't look at science with their passports because, diseases are everywhere, and this industry has always been operating globally and trying to solve problems, the unmet medical needs. So this is a fairly recent sense, and we are all kind of trying to get a sense of it, I think, what it means from a national security perspective. It's going to be seen, I think, over the next 3 years, so how that's going to play out.
Certainly interesting, yep.
All right, Arda, Anj, thank you both for your time today. Appreciate it.
Thanks for having us.
Well, President Trump will make a decision on whether to join Israel's war against Iran within 2 weeks. So what does his delay mean for the broader economy? Yahoo Finance's Rick Newman here with more in this week's rendition of Trumponomics. Rick.
Hey, guys. So yet another Trump deadline the markets have to contend with. And Trump has been saying that it's 2 weeks at a maximum, whatever he decides. Could happen sooner than that. So that puts it right around the 4th of July. And there's another deadline around that time, which is the July 9 deadline for when Trump may reimpose those reciprocal tariffs if he doesn't get trade deals with dozens of countries. Of course, Trump could do another thing, which is just push those deadlines further down the road. I mean, those are arbitrary deadlines Trump has set. I think the big question for markets going back to Iran is, number one, obviously, is Trump going to join Israel in attacking Iran's nuclear sites and trying to destroy them? And then the big one for markets is, what would Iran do in retaliation? Would they try to go after Western energy supplies in some fashion? Would they try to close the Strait of Hormuz? It's a nasty list of things that could go wrong and what ifs. And that's what Trump is going to have to be working through during however much time he thinks it's going to take. Now, I'll tell you what, my guess is that Trump does not do this. I'm guessing that it makes more sense for Trump politically and for other reasons to not do the bombing of that one nuclear facility in Iran to help out Israel. But it could be a 50-50 call or a 51-49 call. It could go either way.
All right, Rick, thank you, buddy. Have a great weekend.
Yeah.
Time now for what to watch next week. And to start off on the earnings front, we'll be getting another round of earnings, including FedEx, Micron, and Nike. Nike announced the results for the fourth quarter on Thursday. That's after the markets close. It's been a rough year for Nike, offering big discounts to clear out product that didn't sell, all while tariffs, we know, are weighing on the company's bottom line. Analysts expecting sales could drop by about 15% compared to last year. That's in line with what Nike has been warning. Taking a look at the Fed, we're going to be getting some commentary throughout the week, including Fed Chair Jerome Powell. Powell testifying in front of Congress on Tuesday. That will be for a semi-annual monetary policy report before the House Financial Services Committee. Also on Tuesday, we're going to be getting monthly consumer confidence data for June in the morning. Economists forecasting that number to tick up slightly to 99, signaling consumers are feeling slightly more optimistic about the economy than they were a month ago. And sticking with the economy, personal consumption expenditures, or PCE, data coming out on Friday. The Fed's preferred inflation gauge expected to hold steady at 0.1% on a month-over-month basis. Well, stick around. Much more market domination overtime is coming right up. Could Israeli innovation be under fire as escalating tensions between that nation and Iran continue? And what does this conflict mean for the economy, tech industry, and of course its well-known startup community? Earlier today, I spoke with Adam Fisher, managing partner at Bessemer Venture Partners. He has a strong background in early stage investing in Israel, and he spoke with me from Tel Aviv.
I think we've been much more affected by a macro slowdown in tech spending and fundraising for venture funds than any real impact related to the war on tech. Where it has affected companies and people is on just the personal side. Obviously, a lot of people have been called up for reserve duty at various points over the last 18, 20, 24 months. There are people who've also been affected personally in horrible ways. Of course, that is also a relatively small percentage of the overall population that comprises Israel's tech community. If you look at funding, if you look at acquisitions, if you look at new startups, honestly, it feels like we're kind of still at the top. There's nothing that is visibly impacted negatively. And I know that sounds like a little bit of a strange kind of juxtaposition of war and reserves, but people, humans, they keep going. They move on. They need to provide for themselves. They've got dreams. They study. They continue. And in a strange way, the longer it is, the more I wouldn't say get comfortable with it, but we become accustomed to this is the way it is. We deal with it, and you carry on.
You know, Adam, last time we spoke, I remember I asked you about whether there was, in your opinion, a risk that some meaningful number of Israeli founders, entrepreneurs, technologists would leave Israel because of the conflict, because of the war. There would be this brain drain. And I remember you told me, Adam, you didn't see that as a big risk because you said at the time, Israelis just feel more unified than ever, more connected to their country than ever. Is that still your feeling?
Absolutely, even more so. There's tremendous solidarity and patriotism, and also, as strange as it might seem, also, love for your fellow citizens here. Yes, we have issues that at times feel like we're tearing the country apart, internal politics, but there's a lot of admiration for the people who dedicate themselves to defending the country and also building the country from an economic perspective. Although Israel is a place where it produces lots of entrepreneurs and lots of companies, you can't really easily transplant them into another country or city and assume they're going to build the same great company. A lot of the company building relies on local relationships, on understanding how you build a company in Israel. And so I have not seen people relocate except for the usual reasons of being close to the customers in certain sectors.
Do you think, Adam, these wars, could they potentially impact what those Israeli founders and entrepreneurs are curious about? For example, do you think there could be even more interest by Israeli entrepreneurs and technologists in fields like cybersecurity or defense tech?
I can't imagine any more interest than there is right now in cybersecurity. We're at an all-time high where I'm guessing, but something like a third of new startups are in that sector. That may be a bit much. Defense tech has been another area that has grown tremendously over the last 18 months. However, most of the entrepreneurs that are starting those defense tech companies are not coming from kind of mainstream tech companies. They're still coming a bit more from the defense sector, the kind of old defense sector. And after this current conflict ends, yes, I assume that the interest level in that will remain high because there's a tremendous demand from various governments and militaries around the world who are seeing a lot of this being used in action.
The venture community globally, Adam, I'm curious, how committed do they remain to Israel? When you check in with your colleagues in venture investing around the world, what do you see? What do you hear?
We hear a lot of both admiration and somewhat sympathy for what we're going through, but they've also recognized that we've done this before, we keep going, we're resilient. I've always said this, those who have been involved in Israeli tech from abroad, meaning VCs, doesn't matter if they're from London or Germany, New York, or Silicon Valley, they remain committed because they've worked so much with Israelis, they've made money here, they have existing investments, they want to keep those new investment opportunities coming, so they remain very committed. They've also continued to visit the country over the last 18 months. That's not always the kind of news that makes headlines, but we've had dozens and dozens. Pretty much every VC that invests in Israel has visited the country over the last 18 months. So I don't see any downturn there. I think where there's a bit more of a challenge, and it's hard to separate the macro from the micro of Israel, and that is just fundraising for funds themselves. There is a downturn in fundraising for venture capital funds across the world that's affecting Israel perhaps more, I think related to the war, related to the challenges in travel.
And I'm curious, Adam, as a venture investor yourself, and you've been in Israel a long time, what are the areas, the sectors, Adam, that most interest you right now?
I'm very interested in both infrastructure software companies and what I would call product companies that are able to leverage AI in various ways. And what I mean by that, both in terms of a product that somehow addresses new challenges that AI poses, but also uses AI to provide features and functionality that really didn't exist before, and also uses AI to develop the product, support it, and sell it in ways that are far more efficient than before. So I know I mentioned AI here several times, but it's not so much new sectors as it is new ways of building companies, addressing new challenges in this current era of AI.
And a final question, Adam. We talked about the Israeli tech community, the startup community. What is your sense, Adam, of how just the broad Israeli economy is faring? And what do you see ahead for that economy when this war ends?
The numbers indicate that the economy has been very strong, surprisingly so. Israel has several things going for it, despite its small size. You've got to understand that aside from high tech, which is unrelated to the local market, there's natural gas, which again is not related to the local market, and finally defense tech, which is having a boom. So, while tourism might be down and certain other maybe consumer demand, you've got three massive sectors that are propping the economy up and keeping it strong. And also unemployment very low. But of course, at the same time, there are many people who are suffering. There are people who have been in reserve duty for more than a year, small businesses who have collapsed as a result of that. And so when I say things are going well, I don't want to make it sound that we're disconnected from the tens of thousands who truly are having a difficult time. But overall, I think we're very pleased with how the economy has held up.
Adam, it is always good to see you. We always appreciate your time. Stay safe.
Thank you.